Dave and Dan are with us. Dave and Dan, if you're new to the podcast, you'll know them because they talk about mortgages. Nick is here as well. Dave came in shadowboxing. Dave was shadowboxing, and Dan was sitting in a chair, unable to move.
I was.
So
because Dave punched him.
Yeah. So Dan,
he wasn't working hard enough.
Are you going to move again? And Dave, are you punching Dan in the head?
At some point. Sciatic nerve pain is no joke. That's all I'll say to that.
Dan's moving around like an 80-year-old.
It's been a while. What, a couple weeks, no?
Man, I'm on probably week 4 now.
Oh, yeah. Yeah, it gets old,
rough.
I bet. Yeah,
it's rough. With setbacks, like I'm not doing everything I should.
Does Ashley think you're milking it so she can
100%? Yeah, the sympathy disappears after I stop listening to what she said. You know what I mean?
Are you sleeping on an angle right now, or?
Yeah, that's the whole point. Is the sleeping's the problem, because during the day it's not so bad if I'm sitting in a chair like this. Even though there's still pressure on the lower back, it's really the leg that hurts the most. So when I'm sitting, it's not so bad. But when I lie down in bed and you sink into a bed and you start to get into that like U shape, that's now the pressure starts to kick back in, and that's the most painful.
You need one of those Dr. Ho things at Shoppers Drug Mart for like $39. You put those little patches on you and then put the electrical shocks.
Yeah. Like I'm getting acupuncture, physio, chiropractic.
Yeah, but not Dr. Ho.
Dr. Ho, I've been watching his infomercial for at least 20 years.
Well,
Dr. Ho is legit.
Yeah. I used to love watching infomercials. I had a weird thing when I was a kid. I liked watching
when I came home late at night, that's the only thing on. I can't tell you how many infomercials I watched.
Yeah. Ron Popeil, the pasta maker.
Oh my God. The last great one was
Slap Chop.
Slap Chop was the last great one. I remember
from the new era.
Yeah, he was.
Yeah, the new era.
Tony Robbins, man. Tony Robbins was the old one. I saw that Personal Power infomercial 100 times.
Yep.
I remember the last version of that had the guys who did the MMA clothing. What was it?
Tap Out?
Tap Out.
Yeah.
They were like students of Tony Robbins. Remember? They were on it. Proactive went really big because Proactive started getting like Justin Bieber and all these big celebrities. Yeah. And I just remember thinking, how much are they spending to get this? Yeah,
it's interesting though, because influencers, and now, that was a little bit ahead of its time, because now that's every day. You pay people on Instagram or Facebook to do the same thing that they were doing back then, but less exposure.
The best marketers are infomercials because they're paying for the TV slot. They have to make the sales. They're measuring everything. Yeah. So you watch an infomercial. So what I'm saying, guys, is if you guys want to do more mortgages, get the Slap Chop out and you just start slapping that thing around.
We're working on a mortgage infomercial. We'll announce that later on.
It's got to be with the Slap Chop.
Coming
It'll be great.
With Dave shadowboxing in the background and Dan just sitting on the chair.
Massive back pain.
Unable to what's going on what's the latest? We're going to dive into the federal election and, Liberals won. Let's go through their thing. But what are you guys seeing on the streets right now? Busy with mortgages, refinances? What are the rates you're seeing? Give us like the high level stuff.
You want me to field this one, Mr. Butler?
Sure.
Volume is insane, right? Like the market's crazy. So what I notice more is everything's a rush. Everything just moves at such a different pace than where it did when we first got into mortgages and real estate. I've been doing this for 20 years now. I've never seen a pace like this. 30 days, people are like, what? 30 days? I can't wait 30 days for my refinance. It's like, well, refis take, 30, 60 days, nowadays. Appraisers, you have to consider the appraiser's timeline. It's not when we get clients that come to us and say, look, I want to put an offer on a property and close it in 2-3 weeks. They think it's just us, but we have to take into consideration the lawyer's time, the appraiser's time, staff times. Staff need vacation. Sometimes people aren't there and we're short staffed. So there's a lot more pressure. I think we're built for that, like our office in particular, just because we're used to it. But it's a tough business to be in now, much tougher than it used to be.
Why was it shorter or longer than 60 or 90 days before? What did you say, 30 or 60
You
days?
had more time. The pressure of, nowadays, especially investors, they want access to money and they want it quick because they're putting offers on properties and they want to close quickly because they want to move on to the next property or the next project. So, when you combine heavy volume coming into banks, the banks aren't out there hiring more staff to support all the new volume that's coming in. So their staff are overworked. Their staff gets behind. A deal that maybe an underwriter could have worked on in a day or two is now taking, 3 to 5 days for them to review it. An appraiser that might have been able to get out there in a day or two is now taking longer. We have to sometimes hold up on a file because we need clarity on income or down payment. Things like that if you're not clear on that stuff up front, can lead to massive problems on the back end.
So are the banks telling you why they're not hiring? Like this?
Well, I mean, yeah, here's the thing. I mean, up until COVID hit, I mean, it was a pretty gradual pace, but even then, like in my opinion, excuse me, the appraisers, banks, even some lawyer offices, I don't feel like they were building for the scale. Like
is your voice deeper than normal?
I feel like Dave has radio. No, you can use the radio voice. Use the Dave radio voice. That's totally fine.
I don't know.
This is Dave.
I think it's the mic. This mic makes me sound really cool.
This is Dave Butler of BM Select Mortgages.
Should we all be speaking like this?
Is this how I? Hold on. Now I feel like that's my normal voice.
I can't speak
I did have
normally.
something in my throat. It was one of the things, like, as Dan and I were building our company and we're working with you guys and you guys are building your company. We were always building it to be able to handle and service the customers in the right way. So as you guys are growing, we're growing. But I noticed, like you guys, we were always trying to staff up, not get ourselves into a point where you're getting these kind of customer service complaints. The thing I've noticed, unfortunately, is with appraisers, some lawyer offices, the banks, which is really the key thing there, they were not looking at it the same way our companies were. So they looked at it more of wait till the fire gets to the third floor and then we'll try to put it out. But for now, the fire's on the first floor, so we're all safe. And that was the way they ran their businesses. And you would think that banks would do it differently, but it's just not the way it happened. And then what happened with COVID is now hiring freezes across the board. There was so much uncertainty. I mean, even in your guys' business, our business was like, oh my God, what do we do now? Do we hire more? I don't know. Like March, April was a ghost town for a while. I mean, so that was a weird thing. And then all of a sudden you're going to flip it and go right to insane madness in May, June. And then not only that, you're going to take the mortgage seasonality and the real estate seasonality out of it, which is, as we all know, right? Spring market hits, summer's crazy, September starts to slow down a bit, get a little spike in October, and then it's that last pulse, and then now November starts to slow down, December, regular month, January. Now that was when we could make all of our moves to make our improvements. You guys could staff up, get ready for the new year. No, last year was May, June, July, August, September, October, November, January, all the way up. There was no break. There was literally no slowdown. Can you imagine a year where December had more closings than August in the real estate world? Everyone would look at you and go, that's crazy. And then to start the year, here we are thinking, okay, fine, January's got to slow down. Nope, more than December. Okay, it's got to be February. February more than January. It just kept going and going until finally, I think we actually are, knock on wood. I don't know. I mean, I don't know if I'm hoping for it or not, or I don't, because we run a mortgage business, like, we need a break. Everybody needs a break. And maybe we might get that seasonality back. But to answer your question, yeah, I don't think that they made the moves and now they're making them late. So like now banks are hiring. It's like we needed you in May and June of this year when it was bottleneck. Everything in the real estate business was bottlenecked, including appraisers, banks, everything. Only now in September and October, they're going to be addressing this.
And so people, I've seen more people go on sick leave, mental breaks than ever before. So you're not just adding staff, you're also trying to replace staff too that leave. You got people that have been with you 5-10 years that just say, I can't handle it. They got good sick benefits or whatever it is. And that's it. So it's breaking people. It's literally breaking people. And then you combine, how many times you see closings? I know you guys aren't out there selling houses, but when you're putting offers in on houses, anything outside of 30, 45 days seems like eons. Like who wants to wait 60, 90 days for a closing? That used to be almost standard, 60, 90 days.
90 days.
Yeah.
2 weeks. Remember 2 weeks back in the day, a 2-week closing was considered a quick closing. So send the deal in, get all the documents, send it to the bank. Bank would do you a favor, rush the thing. Now we go to banks and on a 30-day closing, and they'll send us an email and go, what are you doing about the closing day? Because there's no way we can make a 30-day closing.
30 days. 3 weeks to 30 days. They're like, you got to have everything in a week or two. And, clients sometimes want to play the battle of, well, I sent you pay stubs 3 months ago. And the bank's saying, well, we want updated pay stubs. So there's a lot of back and forth sometimes. And,
It might have been even busier if there was more inventory. Like this fall market, even though the numbers are, they're coming back down to, from where they were, and they were at extreme high, so they couldn't stay there. But it would be busier from what we're seeing with our team. It would be busier if there was just more inventory.
Yep.
There would be more transactions actually happening, right? Yep. And it's just not there.
When was the last time you talked to an investor buying real estate that was like, yeah, I got like 5 options on properties. I'm just trying to narrow it down.
That's been years.
You know what I mean? It's like they're just hoping to get one. Like, I'm hoping my offer gets accepted. There's 20 other offers. I got to go in at, X price, but can I go in firm? Like that's
not only that, the only way I could win the deal was I had to give them a 30-day closing or a 25-day closing.
We have listing agents telling our team that they're losing out on offers exact same price. Nick, I don't know if I told you this one yet. Just they like the other person's story better.
Oh yeah, that's
exact same price, like exact price. It came down to whose story they liked better.
And half those stories.
Oh yeah. My daughter's the same name as your daughter. Oh my gosh, what are the chances of that? I noticed a soccer ball in your garage. I love soccer.
Yeah. Well, I think we told you about our friend that had the issue with his realtor, where they wrote him the letter, and they wrote him the letter about, this is for our family and blah, blah, blah. Our whole family's going to move in. And turns out there was an issue on the purchase agreement about, not being commercial, or there's some commercial aspect or something. And
yeah, because they want to use it as commercial.
Yeah, and then all of a sudden they wanted to use it as commercial, right? So
threatening to sue, price drop reduction, and crazy.
So, what about what are the rates you're seeing right now? Just ballpark, like
it's tough.
And can you distinguish between rental, investor or buying a property and
high ratio? You're still seeing good. So high ratio, anything less than 20% down, owner occupied, sometimes secondary home if you qualify. You can get in under 2%. So that, roughly around there, depending on if you're going monoline lender or big bank.
I like how you're just saying that matter of fact.
That's 5
years.
Yeah,
it's under 2. I mean, we don't want to
variable much lower, 1.5 or lower on variable.
Yeah, we signed a 1.25. Is that what we said? 1.25 a while ago. And then someone on the team just got 1.15 on variable last week or whatever. So it's just, I think these are renewals. Both,
and it depends on whether you're doing owner occupied versus rental.
Sure. So what's the best rental rate you can get, fixed and variable?
Well, it's tough to answer that because the best rate is indicative of the bank that's going to approve you, right? So it's hard.
Give me an idea. What are the rates?
1.5 to 2%. Is a fair variable rate to expect, is what I tell people. 1.5 to 2%.
When you renew your mortgage, so there's a premium for a rental when you get the mortgage
from most banks.
So from most banks, but when you go to renew, there's no.
Yeah, there's a disconnect. Yeah.
There's no question asking if it's a rental or not. So do they still give you the premium, or are you renewing then at like whatever the most competitive rate you can? It's a massive
disconnect. It's and this was happening years ago when a couple of the banks started putting a premium on rentals, and then all of a sudden the renewals coming up. Clients are getting in touch with us and like normal, like, hey, let's discuss your renewal. Let's make a new plan. What are we doing? And the bank, we would see, they would send out the renewal to the client because we'd say, hey, get the renewal from the bank, send it to us, and we'll start working it and shopping it around and everything. We're noticing the bank is actually offering an owner-occupied rate. So on the renewal side, so where the disconnect is that when you're getting a mortgage approved, that's from a whole different department.
Yeah.
When there's a renewal being done, it's actually a whole different department of the bank that's now sending those renewals out. It's literally just a department that gets a list every month of the renewals coming up, and they say, keep the mortgage. They don't like losing mortgages on renewal. So they're going to say, keep the mortgage, do whatever you got to do. So we've noticed there's no looking to see if that's a rental. Now, I don't know if that's changed in the last little while, because I have to assume most of the time that we've all been in the industry for a long time. Anytime a bank or large institutions have a disconnect like that, it doesn't usually last forever, right? But who knows? I mean,
but you're right. They don't want to lose it because at that point, they probably don't care if it's a rental or not. Because in the first 5 years, the reality is, I'm sure the majority of, if there's going to be a default, the majority of them probably happen earlier on in the term than later, right? So if you've been paying your mortgage for 5 years, and with the amount of money they're still going to make based on the amortization schedule over the mortgage, they just want to make sure you stick around. Even with low rates, they're still making buckets of money on these things.
Yeah,
right?
they're doing very well. But yeah, you're 100%. That's something we noticed years ago, and it's funny because we would literally recommend to our clients, say, okay, you're better if we send your deal as a refinance. Let's say, and here's where the conundrum happened. Some of the clients want to do a refinance. So this was an interesting thing. Refinance means it's a new deal. So now you have to kind of pay the premium again on the rental rate if you're going to that bank. On the renewal, they're offering the regular rate. So we actually we did a test one day. We said to the client, hey, go back to that renewal person and tell them you want to refinance and see what they say if they come back with the same rate. And believe it or not, a lot of the banks, some of the banks came back and said, yeah, refinance, we'll keep the rate. Some of the banks came back and said, oh no, if it's a refinance, what is it? Is it a rental? And then they actually were repricing it. So I had some situations where client was only looking to take out like maybe 20, 30 grand. He wanted to like pay off a credit card. He was going to get a much different rate if we do it as a refinance. So he just says, screw it. I'll stay on. I'll just renew. Because he's doing the math over the time going, it's a large mortgage. I don't need to take out 30 grand and all of a sudden pay a 0.6 higher rate. So now you started getting into those discussions. It's crazy where the mortgage industry is going, because you have to, it's so different than when we all started. It seems so simple. Now it's disconnects all over the place, bottlenecks everywhere.
So you're basically falling through the cracks when you do the renewal. They're not figuring out
Correct.
that's a rental property. They're offering you best rate because they don't have a clue. They'll probably catch that over time.
Yeah, most people, that's the thing in our business for sure. Most people are looking to access money. So the renewal is a very simple conversation in terms of business for us, because if they're not looking to access any money from the property, you're probably best to just renew with your existing lender.
Take the best rate.
Yeah, and just because you're just signing a piece of paper.
I wonder if you get a renewal and you figure out that the rate they're offering you is the rental rate and not the primary place of ownership rate. I wonder if you just go back and say, hey, bank down the street's offering me this. You know how you can kind of shop the rate a little bit? If they'll immediately drop to the better rate.
I'd be shocked if the bank didn't drop the rate, because they really, you talk to anyone in the mortgage world on the banking side, they do not want to lose book. Losing a deal on a renewal is terrible for them.
Really?
Yeah, it's awful.
Because why? They've just baked that into their revenue projections. That amortization schedule is baked in.
And they're all the way it works is they all kind of think that is, that renewal playing field, they want to keep equal and they want to fight for the new business, right? So and you're right, to that point, they don't want to lose book. They only attribute a certain amount of drip, but then they assume they're getting more deals on new flow, right? But there's only a certain amount of drip allocated there. And if the drip's bigger, that's a big problem, right? So that's when you see all of a sudden a bank will come out and, oh, wow, that bank who normally does not have the most aggressive rates just came out. Well, that's because they had too much drip. They got to increase the flow, get it back to normal, make the execs in the suits happy.
Got it. So that's what's going on.
Yeah.
Yeah, because then they have to report their earnings.
Yeah. These are publicly traded companies, right? So, I mean,
No, I get it. I knew there was a reason for doing some promotions, but I didn't realize they've lost some of their book.
Yep.
Now they're trying to replenish it, so they'll go aggressive, try to win some business back.
Yep.
Huh.
Yep. That's, and we see that. It's like clockwork, man. It's
Why
crazy.
do you think BMO's the first to strike you often in the spring with because they drop it pretty good to like just under what would be like a barrier to really get media attention, and it seems like they almost do that every year.
Spring.
Yeah, but in the spring.
They time it out right.
And it's always them first, and the other banks must be like, oh God, here we go again. Now what do we do? Do we have to keep up or not?
I think their originations aren't the greatest though.
Yeah,
from
and
BMO.
I was going to say, you have to remember too, the advertising that they're trying to do, those rates that they're promoting, they're not the investor rates.
Oh yeah, no,
right?
I know that.
But they're promoting to draw in, usually insured rates are though, especially HSBC is known for that, right? They had that, I think 0.99 or something.
That's right. It was 0.99
rate.
That was this year's HSBC.
But it's insured. So the idea, to Dave's point as well, but the draw there as well is bring in new business and sell them other products.
That's what I was wondering.
Long-term accounts.
If it was for retail products as well, right?
I think that some of these Canadian banks, there's some really smart people that are handcuffed, but they're given a little leeway here to make a move. And I think if I'm BMO, I'm being realistic here, they're not super strong in originations, meaning they don't, they're not really usually in the mix of like the top 2 or 3 choices, just in terms of rate. Also, there's some things to be desired there with BMO. I think most of us kind of that know all the banks kind of would say they're, and I'm not trying to bank it by, but they're probably on the lower half of the tiers. So yeah, that's in my opinion. Their originations are generally not the best comparative. So why not come out in the beginning of what's going to be the big housing market thing in the spring, and hit it off and make a big splash.
The media coverage. I forgot though. I was thinking BMO regularly, which it was in the past, but you're right. This year it was HSBC that was the first to strike with a 0.99%. That's right.
Now they're fighting. Now it seems like it's BMO and HSBC are doing the spring fight now. Yeah. But HSBC, it was interesting. There's someone smart over there, because if you remember, everyone thought they were stupid last year when they were going crazy on fixed rate in December. And I think a lot of the mortgage pundits, the Twitter guys, were all bashing them, saying like, what a stupid time to put that out. Well, guess what, guys? December of 2020 was the biggest month of 2020. So someone over there is pretty bright because they figured it out. So, and the rest of everyone that's supposedly really smart thought it was a stupid move.
Okay, there was a bit of an election. The winning party is going to save us and bring us to a real estate perfection. What do you guys think of these policies? So I have a few of them up. A Liberal government would introduce a tax-free first home savings account for young Canadians. And they also promised to make the first-time homebuyer incentive more flexible. So like we already had the first-time homebuyer incentive, and now they're introducing like another thing that where you can save up to $40,000 towards your first home and withdraw it tax-free with no requirement to pay it. But we also already have a TFSA. So like they're just introducing like, this is like the definition of regulation on top of regulation. So this is their first thing. You can save up to $40,000 towards your first home and withdraw it tax-free. I guess that's decent. I don't mind less taxes. And the promise to make the first-time homebuyer more flexible. So we give Canadians the option of a deferred mortgage loan as an alternative to the current shared equity model. Oh, that's where the government's taking an equity position in your home on some of the first-time home incentives.
So it's more debt. You just have to repay it right away.
Okay.
So it would depend on the terms and the way they're doing it.
I think I can broadly say, I mean, anything that's going to help Canadians buy homes, especially young people, is great. But as we all know in politics, you know, and just being in this mortgage business, there's so much, you know, hey, we'll do this. And it half the time never happens. Half the time it gets amended to some other weird thing. I mean, I can tell you guys that whole mortgage program that came out where the government would like put in money with you. Like,
did anyone ever use
an
that?
absolute disaster.
We didn't do
one deal. We did 3 pre-approvals. Three.
So it made a great headline.
3. With the amount of deals we do a year, we did 3 pre-approvals and we did no funded deals on that program. We've never funded a deal on that program.
Yeah, so this is
So we're
just
talking thousands of deals, and you did
because
3.
the way that program is designed now, and the requirements to be eligible, the price of the home that you're qualifying for. This is the thing. All of these rules are great. They may work outside of Southern Ontario, but in Southern Ontario, you know, what's a $400,000 house, you know, going to get you, right? It's and not only that, to qualify for a $400,000 or $500,000 house, you got to be making more money than the program would allow you to be making. So there's this sort of purgatory that you'd fall into where you don't have enough income to qualify, but the program is there to help people who don't qualify.
But it certainly looks great when they can say we launched this program and our government's better than your other government. You're looking to, you know, it's.
By the way, I don't think this is a bash directly on the Liberals because every government just is pretty useless when it comes to real estate.
And
but
we like Dave said, I mean, anything that promotes home ownership is a great idea.
Yep.
I mean, there's certainly something needs to change, you know, because all of these first-time home buyers are just being priced out now, you know.
I like this next one. They're going to create a home accelerator fund, which would make $4 billion available to cities. According to the platform, the goal would be for cities to help create 100,000 new middle-class homes by 2024, 2025. The nature of the fund is not clear, nor is it clear whether the $4 billion would consist of grants or loans. Luckily, though, our government has $4 billion saved up. Because at least
You mean they're not going to just print that money?
No, I'm
okay.
sure.
All right, gotcha.
I don't know for sure, guys. I'm pretty positive that they saved up the $4 billion. Because they wouldn't just print. No, like you guys are probably going to think I'm crazy, but they wouldn't just print the $4 billion, would they? No.
Otherwise,
okay, so
they couldn't qualify for a mortgage if they had that big deficits and stuff.
We
right?
couldn't be like a AAA credit nation if we just printed another $4 billion. So that's cool. Not. I didn't realize the Liberals were saving up $4 billion. The beauty of this is that by printing $4 billion to do this plan, they're just going to cause more inflation, which typically hits the housing market first, which drives up property prices further and makes the problem worse. So they're contributing to their own problem.
This type of program does literally nothing. All it does is there's going to be some people that get some of this money, and it makes some people, usually people that have, you know, some sort of relationship with the party for some reason. They get some contracts and it works out well for them, and it does nothing to fix the problem.
And I was just going to say, we're all assuming that they're going to appropriately spend those funds.
It's a load of crap.
That $4 billion in real dollars when it gets down to the nitty gritty is like $1 billion really spent. Like,
It's $4 per property.
$3 billion goes into someone else's pocket.
Well, first you got to do a study for $500 million.
Yep.
Right? Because if you don't do a study, you can't do anything in the government, right? So that's the first problem.
The study's going to take at least 2 years, but they said they're going to build the homes for 4 years, so it's not going to leave a lot of time. I like this next one here. I just skipped over the National Housing Co-Investment Fund because that's just straight up bullshit from what I can see. Though they would include a multi-generational home renovation tax credit. So that's great. Nobody can find a contractor already. we're gonna give tax credits for home renovation projects. So that's really gonna go. That actually people are gonna. I actually of all of them, this one it says no further details are announced. Yeah. But this one people are gonna like because everyone's been renovating their homes. Yeah. So if there's a tax credit, people are gonna like that.
Oh, and that's the future for a lot of people living is multifamily living, right? I mean, that's,
100%.
Yeah, totally. And this looks like specifically to add a secondary unit to their homes to allow a family member to live with them. This one actually looks like good.
Yeah, it just gives you back money, whether it helps you with a penalty or it helps you maybe with credit on some of the renos that you're doing. Great. I mean, great. Sounds
it's
great.
Something, but it's not going to solve.
On paper, that sounds great.
Yeah, but how much, and it's not going to solve the problem.
Well, there's no details. There's no dollar amount. There's no actual amount of tax credit. It's just there's going to be a home renovation tax credit for adding secondary units. The Liberals commit to developing an urban, rural, and northern Indigenous housing strategy.
Great.
Okay. That's good. I mean, that's good. We need some planning. That's great. So you're going to do some planning.
That is great.
Dan likes
what
it.
the heck does that mean?
We don't know what that means. Like you don't already have a housing authority
you know what?
that is doing this. What is the current head of housing authority in Canada? What are they already doing?
No, but just think about this.
Just sitting around at Tim Hortons? Hey, by the way, we got a new government.
We got to do something here.
You guys got to come in and we need a plan.
We got to do some planning.
But this is the best. So someone just said, okay, here. They were at Tim Hortons. Maybe actually, no, probably at the bar. All right, having a couple drinks. Like, all right, what are we going to say? And they came up with a few lines, and that's it. It's just like a headline with nothing.
But the thing is, it didn't actually say they're actually going to have a plan. It says they're going to commit to developing a strategy.
Yeah. So
that means we're going to talk about it.
So they're committing to developing a strategy. They're not actually going to develop the strategy.
So you know what? They might keep this one. This one might actually get done.
Yeah, that's going to happen. They will commit to.
But the meeting to commit to it. That's at least going to be that's a $2 million. They all got to fly. They all got to fly somewhere and stuff. Yeah, that's at least a couple $1 million.
I like how we're just like literally laughing at our country's real estate platform.
This one's an interesting one.
What's this one? The Liberals would introduce a home buyer's bill of rights.
Yeah,
it's
the blind bidding. No more multi-offers.
Oh, blind bidding. Yeah. No, okay. This one actually makes sense. No?
Well, if you're the homeowner, do you want to disclose what your highest offer is, or do you want someone to come in and bid on what you think the highest?
For buyers, it does.
If I'm the buyer, I like it.
If you're the seller, okay.
Now we're destroying what's called free market.
Just to rewind here, blind bidding is when multiple offers come in, but when you're bidding to buy a property, you're not told
holding offers, right?
You're not told what the other offers are.
Yeah, you're told like, hey,
there's like 2 other offers, but you might bid $100,000 over. But maybe you just have to bid $10 over and you would have been the highest price.
So let's intervene in the market, right?
Well, the blind bidding one has been a disaster.
I get it.
That one has been a disaster. We've had some clients upset, not really investors, because they're running the numbers. Like, I'll pay this much and the numbers work. But if they're buying for their primary place of residence and they bid $100,000 over, it is in their back of their mind, like, how bad did I get screwed there?
Well, yeah. And to be fair, there are, in every industry, there's people that don't do things on the up and up. I was just going to say. And so it does. I get it. I think the problem with this that I have with, and we can go through the rest, but with any of this isn't under their jurisdiction at all, right? These aren't federally mandated things right now. So now they have to further reach their hand into stuff. And I think we need the federal government in less flippant things, not more. So because once they get their hands in it, it just becomes inefficient. It becomes slow to change. It just becomes crappier and crappier.
And it doesn't come out.
Yeah, that's the problem. So I'm not against some of these things, and we'll go through them. The problem is the way at which they're being done. It's no different than anything else that the government does. Once they get involved, they're so inefficient. They're so crap at doing things, and they'll screw it up. They'll do it the stupidest way possible. impossible.
There is a really good one on there though. Like insure lenders offer mortgage deferrals for up to 6 months in the event of job loss or major life event.
Yeah.
That's actually really cool.
I agree.
That's
good. But the way at which they're going to do it is, I promise
totally.
you, it's the shittiest way that you can do something. Is it's going to be done this way.
Can you not already go to the banks? Isn't this something we discovered during COVID? Don't most of the banks already have something in place that if you go to them and just say, hey, I need 3 months of deferrals on my mortgage payment, they'll do it for you?
No, they only did it for COVID, but the insurers so if you do an insured mortgage, like Genworth and CMHC do have those types of plans. Now but remember, it's the insurer.
So if you do have a high ratio mortgage in or 20% down and it's insured, in the fine print of your paperwork, you might have the ability to defer payments.
There is some definitely ability.
Yeah. Okay. So that's something we kind of didn't know before. And that seems good, this one. Another one here is establish a legal right to home inspections, which are currently challenging it to do in hot markets. Okay, makes sense.
Home inspections and appraisals. That's one of the biggest things, because we get that question every day, right? Can I go in firm? You ran my numbers, Dan. Can I go in firm? The problem with that is no matter how much I run your numbers, I can't clear the property until you have an accepted offer.
Yeah, and the bank could change what they want from the person that you're already working with. So it's a disaster.
When you've been doing it this long, man, and you'd be amazed at the things that turn up in a house that you didn't know. Oh well, everything's in order except there's a small leak in the kitchen and it's pouring in. Well, the bank may not.
There's aluminum wiring, and now they want an ESA. And
it has a 50 amp panel instead of a 100 amp panel.
When you're going in with, again, going to the first point here, the multiple bids, you're going in $100,000 over what the listing might be. What if the appraisal comes in short? Do you have the backup for the appraisal? So there's things.
And you probably waived your home inspection because you were in a bidding war with 12 other people.
And just so everyone understands that if you bid $100,000, if the list price is $1 million and you bid 1.1 million, but if the appraisal comes in at 900,000, you get an 80% loan to value, it's against the 900,000.
Correct.
You will then get that money, plus you'll have to come up with the missing 200,000.
Now you got to come up with the difference.
That's right.
Yep. So it's a disaster.
So you have to be prepared. So we'll run through someone's application and try to mitigate some of that risk. If they have a large HELOC on another property, $500,000-$600,000 or something, they can offset the risk of the appraisal coming in low. I can look at the listing and review it and see, is there any flags on the listing? What's the zoning of it? Like, you can mitigate some of the risk, but
the problem with all of these is it doesn't solve, like, if we look at the hotter housing markets in Canada, what's the problem, right? The problem is just kind of lack of supply.
Yeah.
None of this is great. This is cool, but it doesn't solve the affordability. If the problem is affordability, this does zero to solve the affordability.
Well, and how do you fix affordability? Sorry, I cut you off there, but I mean, you got to. I think the government needs to be attacking supply. You know what I mean, and then making it easier for builders. I mean, right now, how hard it is to build subdivisions, and
it gets worse and worse every month that goes by.
Yeah,
to get financing on building a subdivision,
not even subdivisions, guys. Even to create second units in homes, which is increasing the affordable housing supply, because those are what are considered affordable housing units. Some municipalities, right, are it's terrible. Like, some are actually okay to work with, some are terrible. And you're like, do you just not want these? Like, we're trying, there's someone there that's trying to provide housing in the community where housing is needed, and you're making it impossible. I mean, not fire code, building code, like, follow that stuff. It's way beyond this stuff. Like, you can't get calls back, you can't get people out there. Like, it's just a disaster.
Doesn't it scare you though that is the most obvious thing to anyone in the real estate business right now in Canada, is it's a supply issue? And doesn't it bother you that you just showed us 9 points on this thing, and there was only one talking about that crazy cockamamie 4 billion, 100,000 houses. Like, why can't we just break it down into 1 point? We're going to try to get as much supply. We're going to make it easier for builders, and that way we can, the government has made a mandate. They're going to let this many people into the country every year, but you are not caring about providing them with housing, right?
Well,
and then you're going to make it harder for people, organizations to make more housing.
So I'll tell you why. Here's my opinion as to why. Because we first pulled up the housing shortage numbers. That was probably 3 years ago. It wasn't even a talking point yet in any political circles. And we were like, guys, it's very obvious what's going on here. So if they go downtown and they want to try to build condos, there's a lot of people, and the more and more, depending on where they are, if there's not a bunch of other buildings already, people don't want those in their area, right? They don't want these tall buildings anymore. So there's that challenge. If they go out to these other communities that are a little bit further out, then they're taking away farmland. They're taking away. So there's a lot of pressure to not develop these areas as well, and there's kind of pushback,
environmental pushback.
Yeah. Actually, you know what I was surprised by? Glen Abbey recently in Oakville, the developer, I don't know if they're going to circle back, they withdrew their application against the town of Oakville, actually stopped them from redeveloping Glen Abbey. I think it's Great Golf. I'm not sure if it's Great Golf or not. But I read recently that they had withdrawn their application to they changed the name of the board, whatever it was called, the municipal board, the Ontario Municipal Board or whatever. They, so they're not going to be developing that. And I was surprised by that because that's a big area. There'd be a lot of money involved.
And what was the reason? What did they say?
I don't think I don't know if they had specifically something well, there was a lot of pushback. Oakville had changed the laws. Like the town had pushed back. And to be fair, the residents in Glen Abbey, there's some money there. So they use their resources to fight the builder a lot.
Well, just imagine the traffic coming out of Dorval. Like, I don't think the city's built to take all those houses down at Dorval and the QEW. Yeah. But listen, look at the main factors of real estate. All the government's fault. Listen, supply, immigration, rates, and debt. So supply, the government doesn't help in building any sort of plan to new supply at the municipal level, at the provincial level, and at the federal level. No good plans at any level. Immigration targets are constantly raised, but there's no new supply ever planned. So supply, government doesn't work to fix. Immigration, the government puts in more people but has no new supply. Interest rates are held artificially low because we don't let any of our banks ever fail. There's so much debt. We have to buy more debt. We have to keep rates low. That drives the real estate market, makes prices go up, makes incredible demand for the real estate market because of the low rates, and makes it unaffordable for the masses. And then on top of that, the government continues its debt spending, which prints even more money, puts more inflation into the market, drives up prices further, and makes the problem bigger. Yep. So of all the factors that I can figure out that influence the real estate market, the government is at fault on each factor. And yet they're the ones coming in announcing that they're going to have this plan to fix the real estate market. Look, it's so backwards. It's completely backwards.
It's a comedy in most... If you're reading a book, you're supposed to laugh at this.
Yeah. Maybe or it's like Shakespeare. What's that? Like a tragedy.
Yeah.
Right?
Yeah. Did I miss the one where they talked about the capital gains? Did we?
I don't think we got to that one yet.
Okay, Hold on. There's more.
Yeah, I think there's more. Oh yeah, because there's so many of these things. There's the platform. Go ahead, Nick.
An assortment of measures aimed at curbing speculation.
Yeah.
Basically, there's a dartboard, and they're just going to try to.
What's this one? Deterring rent increases that fall outside of a normal change in rent. Well, in Ontario, we already kind of have that. The creation of an anti-flipping tax on residential properties, requiring properties to be held for at least 12 months. The banning of 12 months. So that's going to be takes 12 months once you move in to actually finish the project anyway. The banning of new foreign ownership of Canadian houses for the next 2 years. So they're not going to ban it outright. They're just going to ban it for 2 years. And the expansion of the upcoming tax on vacant housing owned by non-resident non-Canadians to include
other countries do that though. Like why wouldn't we restrict that?
But the thing is, again, it goes back to the numbers. The impact this actually has on the housing market is minimal. It's tiny.
Well, from what we see, so many people. Well, no, if a family wants to buy here in Canada, they have a son or daughter that they put to school here. Mm-hmm. They get legal status in the country. Yeah. That person then has legal status in Canada. I don't know how you guys view that person, but if they have status here in Canada, then they have bank accounts in Canada. They can pull in capital here. If they pull in enough capital, they won't even have to go to see BM Select to get a mortgage. They can go buy a property.
Daddy and mommy put the money in the bank now.
So
it
sounds good to stop the foreign ownership, but we've quadrupled or quintupled the amount of foreign students that we have in this country that have legal status here. So unless we talk to the universities to say, hey, you got to stop that, we still have foreign money flowing in here like crazy.
Yeah, it's the non-permanent resident growth is huge.
It's huge.
It just doesn't just. But the thing is, people make up their own minds of what the problems are, and then the government addresses them even though they're not the real problems. Yeah, and they're happy to do it because there's nothing here saying, okay, well, guys, to your point, we've screwed up supply, we've screwed up immigration rates, and our deficit spending, we can't do anything with the rates because of deficit spending. So I don't know, we can't really do anything about it. Do you know what I mean? People are talking. They're like, you know what? I'm really upset that some foreign investor, he bought these 2 condo units next to me. I'm like, well, he's a foreign investor. Why should he buy 2 condo units? And the government's like, you know what? That's a good point. We'll address that point because that'll get your vote. It won't do anything, but it might get your vote.
Let's think about it too. What's the?
And isn't that a little bit of discrimination? I know they're foreigners, but I mean, in today's world, like, should you be? If we call a spade, isn't 100%, that like? Sorry, 100%. You're not one of ours. You can't can't buy a property.
What,
you know?
what is forcing someone to own a house for an extra 12 months going to do? Or 6 months, let's say, because a reno, let's say on a flip, is going to take you 6 months.
It's going to move the income tax from the property from 1 year to the next.
But also, what does it do to the value of the home?
Yeah, I mean, short time, you don't know, but yeah, it might even go higher.
It might even go higher. That's the thing. So, like, what is that really doing to curb the problem?
They did have the first one was they are going to start a rent-to-own program, which is a little bit laughable that the country that kind of prides itself in having a big middle class is now basically admitting, you know what, we're going to help you out because you can't buy in this country. So we're going to, they really are going to do this, right?
Good luck. The banks hate rent to own.
Yeah, we should know.
So, so as much as the Liberals have a great plan here, I think they need to learn what we learned many years ago.
No, this one is actually excellent. Here's why. We've been doing rent to own programs en masse for maybe longer than anyone in the country. And if there's $1 billion in loans and grants available, I want some of that.
Nice to take a piece of that.
Okay, this is a good. We should dive into this one a little bit further.
But to be fair, and the purpose of those rent-to-owns were for people who had bad credit but high income. The purpose of these rent-to-owns are for Canadians who just can't afford anymore.
So you got a good credit, you just can't afford it.
Yeah, you basically just can't afford a home.
Okay, guys.
Again, I got to see how they run this by the banks.
Yeah. I mean, based on their CMHC program or CMHC, think of how this program is structured. It will be the worst rent-to-own program in history in Canada, guaranteed.
Who's the sellers? The sellers have to be willing to sell, and that's the thing. Canadians love to own real estate. They don't love to sell it.
Which banks are going to partner with them on this?
I was going to say, the smarter thing would say if they'd say the government says we're going to buy this many properties and put them on a rent-to-own.
They'd have to be the buyers and the sellers.
Yeah. Honestly, the one that I laughed at the hardest is sounding the best. The commitment to making a strategy.
Wow, they're committed to making a strategy.
The
strategy works out is a different story.
I've made a lot of commitments in my life.
They might have even fulfilled that promise already. The election was only a couple of days ago.
The ban on blind bidding does make sense. Legal right to home inspections makes sense. Ensures total transparency on history.
I don't agree with the blind bidding. I get what you're saying. Just
because you're selling.
Yeah, if I'm the seller, it's
Dan's a free market guy, man. He's a free market guy. Can't hate it.
I get it. I maybe not have the you get realtors nowadays that just won't even accept offers, right? Like they'll just tell you don't even bother submitting it until X day. So I mean, maybe you could curb that and you could make them have to present. I don't know if they have to or not. I think maybe they do have. Do you have to present?
Yeah, if you get an offer, I mean, I don't know if they all do, to be fair.
Yeah.
But you're 100%. If there's an written offer submitted, you are supposed to present it to bring it. 100%.
Okay. So, but I get it. I do. It creates overselling. And I mean, look, that can lead to issues on closing. That's where we've run into sometimes appraisal issues again. If it comes in low, people are going over value.
Yeah, I don't hate it for that, and that we'll have less appraisal price issues.
Yeah.
You know what I mean?
How does that create more inventory?
No, it doesn't fix the problem. The current process is a little bit broken.
To fix problems, please.
Okay, sorry. We're just implementing policies. We're not changing anything. We're just implementing things. Gotcha.
But to anyone trying to buy a house, I mean, the current process is a little bit broken because there's a lot of people that don't. They don't do it in good faith, right? And there's not another offer, and they're like, "Hey, sorry, make sure you bring your best." There's 3 people calling me. Looks like they signed one. I think it's coming. So it's kind of it's
lots of games.
A lot of that's a little bit too much. So I get where you're coming from.
It gets to be from our side. What we see on it, it gets a little excessive.
For sure. For sure.
If there maybe it's whatever point there was here that they're going to release the details of all offers, and then maybe it's like
that's fine. Ensure total transparency,
and that stops people from being able to play those games so much. Maybe it's something like that. Because right now to get the details,
that's a good in between. Everything's public. Any offers are public. So
I was going to say they got to go after the schematic of
somebody
the
wants
setup,
to bid more,
as opposed to the actual you can fix this a little bit without imposing on free market. You just have to change the rules.
You're right, because right now, if they just release the date, because the buyer only is allowed to know there have been multiple offers, but they don't know the details. So if we're just allowed to release those details, that might fix some.
They actually have to file a request through the real estate in Ontario through the Real Estate Council of Ontario to get that paperwork. So then the brokerage submits it to Rico submits it to the other brokerage. Like no one goes through that process to get it.
But if it was easier, that might just
it
keep
stops a
everybody
lot of
little
the
bit more
fraudulent
honest.
stuff that's
Yeah.
be going on. I mean,
The wheels are turning in my brain though. How many fake offers do you end up getting on there? You know what I mean? Like they're real offers, but they're like, hey, I need you. You're my brother. I need you to put it in. You know what I mean? Or like,
which will happen, but less people will go to that much work to
100%.
defraud the system. And if you get caught doing that, then there's a real paper trail of you doing something fraudulent, and that could get like becomes a problem, right?
This one require real estate agents to disclose to all participants in a transaction when they are involved in both sides of a potential sale. That one's weird.
Don't they do that already?
In Ontario, I don't know.
Maybe not all
Ontario.
provinces have to do that. All right, so I don't know.
You're the selling agent. You're like, no, I don't know the buyers. I don't know, but you are.
Who's the buyer? I have no idea.
Yeah,
Isn't
never
this
met
your
him.
name right here? Oops.
Guess I should have disclosed
You
that.
noticed that?
Technically, I'm not supposed to disclose that.
You guys read these offers? I only look at the number. That's it.
So anyway, there's some of the federal election.
I like the
platform.
shot. I mean, look, something's got to give, right? These first-time home buyers, the youth, they're getting priced out, and they're getting priced out quickly, especially where we live.
I just have this weird bias. You guys probably know this of me, is that if you don't fix the money, you can't fix this problem, and you have to stop the spending. And to do that, you need honest money, not money that you print. So it's just wrong. But
you can't keep rates at negative. What do you think real rates are? Because they're saying inflation is 5%, and
So
rates
real
if rates are at 2%,
are -3.
Yeah.
so rates are
Negative
right.
3, yeah.
If their inflation number at 5% is accurate, which it's hard to think that that's really accurate, because I mean, just look at gas, real estate, and food over the last year. It's been more than 5%.
More than 5, oh yeah.
But if it is accurate based on their numbers, they're already negative.
I remember hearing I don't even remember what it was. It was like someone was saying, like, look, if you just take out these things, there's really not much inflation. It's like, wait, those are like the
biggest
most
ones.
important things. Like, how you can't just take that out?
Yeah,
That makes
fuel,
no sense.
food, and housing. Like, so you need heat, housing, and food. Yeah, all the things that
Yeah, but take those out.
Yeah, take them out.
The Bank of
But
Canada,
T-shirts and flip-flops, they've definitely gone down. You know what I mean?
The Bank of Canada changed their example on their website because they use a substitution model for calculating inflation. So they're like, if coffee's expensive, the consumer will obviously choose tea.
Yeah.
And tea is less, so we include that in the basket and not coffee. And I'm always like, no, but like, let's say you really want a coffee. Like, how are you guys? If I wanted, and before the example they used was like steak and chicken. So like, if the consumer sees that steak prices are higher, they will obviously buy chicken instead. And I'm like, well, no, like, let's say you really want a steak.
Yeah.
So this whole substitution model they use for calculating the inflation thing is just like complete garbage.
Yeah, it doesn't.
broken.
Yeah, it's a broken system.
Broken.
Mm-hmm.
Okay, so we've concluded and fixed nothing in this conversation.
Yeah, no, we just talked just like we just talked about
We've done
it.
that.
Yeah.
We've committed to
We
discussing.
committed to discussing it, and that's it. We've done our
Maybe
part.
this is part of the reason that I think it was the lowest turnout ever, and this is the least amount of votes the prime minister, like whoever won, the least percentage of votes they've ever gotten.
For real.
Yeah, in history. The one before I was just reading was Harper. Like it was considered really low, like 36%. They're like, oh, no one likes this guy. Trudeau's at 32%. Just think 32% of the vote in the country, and you win.
Yeah.
If something's not slightly wrong, like even in the States, they say someone doesn't win the popular vote when it was like Trump or Biden or whatever.
Yep.
But they got 48% or 49.6%. Like they were close. Like this is like 32%. That's low,
If
man.
it's
Like
that
people
easy-
don't like you.
No,
If it's that easy to win, I'm starting to think we need to pick someone. Like Dan, I'm looking at you.
I think it's
man.
Dan too.
You
Look at the
might
smile.
have to-
Hey,
I think Dan could do
I
it.
got the sympathy vote with my back.
Yeah, you got the back.
Yep.
We can use our marketing powers together to get you into.
Who's going to
just
do all
say
the
that-
mortgages? For
And just say that you're going to build lots of houses. Just say, I'm building lots of houses.
Well, you know what? We should come up with the platform, and it'll just be it'll be the existing platform they had, just like ramped up a little bit. Instead of committing $4 billion, we will commit $8.
Yeah. I'll commit to discussing building more housing. Absolutely, 100%.
You know what? I'll commit to discussing that and fixing the supply problem. The demand problem. I'll fix everything.
I will ban foreign ownership for 2.5 years.
Listen,
Not
why don't
2
we
years
just do
like
this? There's 4 things on there. It's 4 guys in here. I'll take rates. Tom, you got debts. You got debt. You got deficit.
I got debt and
what do
honest-
Nick, you're good at
Supply.
Yeah,
I'll
you
take
take
supply.
supply. Yeah, Nick takes supply. He'll just come in there and just muscle his way in. It's perfect.
There's no contractors to build right now, but we'll figure something out.
Why don't we run as just like a 4-person party? Like we'll just 4 people, all dual prime minister. Like like it's a shared thing.
It's funny. Yeah. Okay. Let's do it. And it's funny that we need contractors and we're apparently really good at immigration, but I guess we don't like connect the dots and say like, hey, if you're skilled labor, electrical, plumber, anywhere in the world, we'll just like ramp up forget that approach. Instead, we'll just use the current model. Yeah. I was thinking someone else was saying like, you know, how that we have a shortage of nurses, or we're going to have a shortage of nurses if they mandate the vaccines and nurses are leaving, whatever's going on that's going to, you know, we're good at immigration. Do you think it would be a good idea to just say, hey, if you're a nurse, we'll just like bump you to the front of the line and welcome into Canada? I'm sure a whole bunch of Canadians who are nurses probably don't like me saying that. I'm just throwing that out as a hypothetical. Wouldn't that be like a smart idea if we were in a shortfall of something?
No, that's definitely bad.
Well, you know what the crazy part is like, you know, we've all seen it. Like I know all of us have friends that own restaurants, bars. They, since being allowed to open their business again, have had an absolute just rough time hiring staff, right?
Not just them, a lot
and a lot of businesses. You know, the government always talks about doing, you know, putting money here, putting money there. I mean, why not? And by the way, giving these people money to now just not go back to their job and sit at home. Why not? You know, hey, I can give you money, but like you have to go to a home, you know, building course or something like that, and make them actually do something for the money that's going to actually help things that our country needs in the future. Yeah, it's not going to help tomorrow. It's not going to help a year from now, 2 years from now. But like this isn't going to be a 1 or 2 year problem. Like we're creating like 10 and 20 year problems. Why not attack it? But that's the thing. That's not going to get immediate results. So no one will do that. But you know, I look at you guys and I look at Dan and I look at how we built our businesses. I mean, we're approaching 2 decades now. It's like not once ever was I not in it for the long game. You know what I mean? So I think you just need a bunch of different mindset to be like, hey, this is a problem. It's not going to fix itself anytime soon. Let's create now an idealism where we're going to look at the long game and let's really make a move and really try to do something crazy. But that's just never going to happen the way that the system is set up, unfortunately. But that's like, if I had a way to do this, I would look at you doing something like that. Because the amount of money that we're wasting giving to these people, these workers, and them not wanting to go back to their job, I don't fault them for anything, you know, but I think it's on the government now to look at that as an issue and figure out how can we fix that? How can we get them back to work? Let's put them in things that the country's going to actually need badly, you know, not just now, but 5, 10, 15, 20 years from now. Anyways, that's it. But I am not running. So
it's like our democratic 4-year election cycle just doesn't even allow for it. Because that's the right thing to do.
Yeah.
But everybody's they're just focused on like, well, what? He called an election this time after 2 years, no? Yeah. Like there's never this long-term, hey, I'm just going to do what's right for the long term. Even if I'm only in for 4 years, I'll set the foundation where we can kind of grow from here.
Politics is nasty.
Do you think you could ever get elected with that? Because there's hard things that have to be done to fix it. And I don't think you can, the way the system's set up, I don't think you could,
no, it's got to be all short-term solutions.
Anyone could ever win because as us as a society, most people, their time horizon is short-term for everything. Mm-hmm. They won't sacrifice anything for the long term. You know,
you're right.
And like if you look at savings numbers and investment numbers, and you look at lifestyle, like you look at just like even in Canada. I mean, America's worse, but you just look at like obesity levels are increasing in Canada and stuff because no one's willing to make short-term sacrifices for a long-term benefit. So I'm just not sure you can ever run on that, anyone, and ever get elected.
And because of that, it's I guess like democracy the way it is doesn't really work.
It's broken. Yeah.
But do you know what I mean? Like it's like we have democracy and everybody cheers it. It's like, yeah, we live in a democracy, but like the results we get from the democracy are like the madness of crowds.
And the more government interference, the less of a democracy we live in.
Yeah, definitely. I'm definitely like more and more. I'm just like this government overreach and the size of the government is just ridiculous. So I'm definitely on the side of smaller government. But it goes back to this deficit spending. Right. That fixes everything, because if you had to say, okay, look, you got to either balance your books, or so you can only spend as much as you bring in, or you can kind of sway by 10%, let's say, you know, so it's a little bit of leeway for very important projects that come up. That causes them to make responsible decisions.
That actually fixes a bunch of the problems on there.
Yeah. Or if they don't have the money beyond that 10%, whatever you're saying, they would then have to go to the people and tax. And for that, you would have to have then good reasons and say, hey, listen, we have to increase our taxes because we need 5 new hospitals. And you better believe that money's going to the hospitals because I'm about to increase your tax. You guys are going to like have my head if I don't build the 5 hospitals with your tax dollars. But instead what we do is don't raise the tax. I can spend more than I want. I'll just print this money, give it to my preferred contractors. Maybe a hospital will be built.
And we'll lower rates. Maybe. We'll lower rates so our budget looks good and it looks like we can afford it because we've lowered rates. So like someone like Trudeau gets out there and is like, he's like, oh, well, now's the time to do this because rates are so low. I'm like, dude, like that's stupid.
So the democracy, the way it is completely broken. And then capitalism, this is another thing that bothers me, I think, in the media when you hear that like capitalism doesn't work. We don't have capitalism. When you save the banks the way we did in 2008, that to me, capitalism is you
up and down.
You save capital, like you save your money. First of all, you have to work to produce value to an economy to get capital. And then if you're a good saver, you save capital. Then you put your capital at risk in a new venture, like a business. And if you're a good risk taker, you earn a profit or you lose your capital. That's what capitalism
is. Take a bad risk.
Take a bad risk.
Now you can't take a bad risk.
It's your risk.
But when the banks, they're, I know you guys are in the mortgage world. I don't know what I want to say and don't want. I know what I want to say. What I want to say is that when the banks don't have to have good risk assessment because they know they're going to be saved out. We don't have to talk about Canada. Let's look at the US. When that just changes everything because then they can just loan out money to do all frivolous things. They know if the loans go bad, they're going to get saved. So risk analysis goes out the window.
Risk is gone. And when risk is gone, you got a big problem.
We are not in capitalism.
Like we are no longer in capitalism. But the root of that deficit spending, because they couldn't do that if it wasn't for the deficit.
Yeah, absolutely. That's the root of it. The fixing the money, fixing the world, the whole Bitcoin message. I know. I see. It took me long to get into Bitcoin, but the idea that you fix the money, you fix the world. There is truth to it, because right now we just print away.
There will be major damage though upon
changing.
Of course, I think that's what everybody's.
Of course,
of
course.
So and this is what no one knows, right? But doesn't the day come? Like, doesn't it eventually? And I don't know if it's 10 years, 20, 100 years, 1,000 years. I don't know, but doesn't the day have to come where it has to get fixed because we can't keep going? Like sooner or later, we can't keep going down this path. Maybe we can. I just in my head. I try to figure it out. And I'm like, well, yeah, sooner or later this explodes somehow. Like I can't figure it out.
It's like what we discussed earlier today. In the 1920s, it was the roaring 20s, cheer, cheer, cheer. And then October 1929 comes and boom, game over. Mm-hmm. Next 15 years, disaster. Great Depression, World War II.
I was literally about to say, like, the only way is you have to almost crash all the markets when so it needs to be manipulated. All the markets need to crash, get it to the point where we all believe it should, as opposed to where it is now, and then start over. But again, people will get decimated. Yeah. But
so that's not going to come freely by any means.
But I mean, it did in 1929. You know what I mean? That was free market doing its thing and free on the way up, and free market doing its thing on the way down. And
it's pain. There's pain.
Now there's no more free market on the way down. It seems like even like you look at the U.S. stock market and everything.
It's a perfect line.
It's literally like the up. It's like an infinite uptrend, and every time there is a dip, Powell intervenes, and then it's by the dip, and like it is crazy to me to think that like people, young kids these days, like in the States, like we didn't know what buy the dip meant, but like now it's an acronym, BTD, buy the dip. Like, and kids are walking around like, yeah, buy the dip. Like, you guys don't even know what you're talking about, but yet you're saying buy the dip. It's just crazy to me that that's where things are.
And you're saying that because everyone seems to think that if a dip happens, it's just going to get corrected.
Yeah. Why would you not buy the dip? Because everything goes up. Nothing goes. These kids are looking at charts of like, going, yeah, everything. When it does go down, it just goes back up. So buy the dip. Like to me, it's the thing is so crazy. I laugh at I mean, I have nothing to do other than laugh at it because it's sad. So it's either cry or laugh, but I don't know how it gets fixed. But to all of our points, the only way you don't end up, I think, in like a Bitcoin type situation, new currency, is you got to crash everything. And no one wants 1929.
No one wins elections on that.
Nobody.
No. Hello, my platform is
I'm going to crash every market and we'll start over.
Hello, my name is Tom Carranza, and my plan is to crash all the markets and decimate your savings. They just destroy your real estate values.
Yeah, it doesn't line up with politics. That's definitely for sure.
No, there's such a massive swing of not just the money being spent, but the money that's owned by the people. It's shifted shifting from the people who maybe have less or want to get into the market to the people that have all of the money. So if the cost of goods continues to go up, only one can afford that. You know what I'm saying? So it really is. It's
History
scary
repeats,
to
man. Let them
yeah?
eat cake. Let them eat cake is the upper class looking at the lower class saying, hey, man, you don't got it so bad. But then, I mean, what wasn't Antoinette? Someone's going to roast me for this one. Marinette? I forgot.
I think it's Marie Antoinette.
Yeah, thank you. She was beheaded. So, I mean, yeah.
I think we're closer to Elysium than we are anything else. Yeah. You know what I mean?
Hunger Games.
Crazy, man. Yeah.
There was some sci-fi show. Was it the 13 or something? It was on Netflix. Anyways, these guys get sent down, and then later seasons is like there's a bunch of people that all together they say yes for the good of mankind, for the good, and they all just repeat that thing, and it's weird because it's like you either go in this direction or you're like on your own, and everyone it just goes into kind of chaos, right?
Yeah.
We do feel like we're getting pulled in many directions, man, with everything going on in the world. Like you're either for more affordable housing or you're not. You know, you're either for health measures that are safer for the entire population or you're not. You're either for the Leafs or you're not. You know what I mean? You are pulled in different
You either think Mahomes can throw a football or he's terrible.
Well, you think that. I have no time for you.
As good as Mahomes is, when I watch him play, I think I can be a quarterback. Because when I see him throw, I feel like he just does this. I feel like he's just taking the ball and just going like this.
Yeah. Well, he's
lobbing the ball.
He is the best. He's the greatest.
He makes it look crazy.
He does. He does. Tom's a recent football fan, so he's amazed at seeing Patrick
Well, I mean, I was on the bandwagon.
The Bills bandwagon.
But I was on the bandwagon in the 90s.
Oh, were you?
When Thurman Thomas couldn't find his helmet, I think I just walked away from the TV saying, this team's never going to win. Do you guys know that moment where he couldn't find his helmet on their third Super Bowl or whenever it was? Jim Kelly. I was fully on the bandwagon. And then I just left it, said never to return. And then I saw Josh Allen 3 years ago stiff arm that defensive back. I think he stiff armed somebody, ran over him, and I was just casually watching. And I'm like, I like this guy. I'm back on.
Yeah, they do a great job promoting that. They've really changed the rules, and it's just such an exciting game now. That and basketball is so I love hockey. Don't get me wrong, but watching a hockey game is so much less exciting to me than basketball or football. You know, and I know they've tried to change the game, but I don't know.
You know what would be exciting if we could drive across the border to Buffalo to go see a game sometimes.
That'd be nice.
They just delayed it again. You know, someone on our team
they'll open it with the flights. So it'll be open for November.
Can we drive to the border and walk across?
No, so listen.
But you can take a helicopter.
Oh, okay.
You can't take a helicopter over.
What is it? $1,500, I think.
I don't know.
$1,500.
Somebody on our team who is a Bills
Kansas City coming up.
Not this year.
Oh,
no.
That would be great. We should do it and take a helicopter too. It would be a blast just to take a helicopter up there.
We're doing it when Casey's in Buffalo. We're getting
someone on our team who is a Bills fan last Sunday drove to the Canadian border, and we told him, we're like, the border's closed. The border's closed. He drove to the border and he took a picture and texted to us saying, "I'm going in."
Well, he was in Niagara, and guess what time he tried to cross?
Yeah, he tried to cross at like 12:30 a.m. And he crosses over into the U. So he goes over the bridge. That's the crazy part. Like I figured from the Canadian side it was closed, but he gets over the bridge. The customs officer says, "Why are you here at 12:30 a.m.?" He goes, "I'm a Bills fan. I'm trying to get to the Bills game." The guy's like, "The game's not for like 12 hours." He goes, "Yeah, I'm just coming early. I'm going to go hotel." And the guy was actually sympathetic to him. He said, "Oh, you know what? I guess we can make exceptions." He said that.
Let him in?
And, well, he said, "Park over there. I'll go talk to my supervisor." He goes and parks at the side. He starts getting out of his car. The supervisor runs out of, I guess, the building.
Because he thought he was going to run.
Get back in your car. Get back in your car. No, what we found out is the moment you step out onto foreign soil, the supervisor knew he was sending him back to Canada. But because he stepped out of his car, he technically should quarantine back in Canada. Boy. But because he took one step out, they put him back in Canada and said, okay.
I don't think he cared, because I don't think the supervisor cared that he was going to have to quarantine back there. I think it's to Dave's point. You don't go there and get out of your car, because then you can just take off in the middle of the night, right? They don't want that. So I think it's more of that than anything.
They're pretty serious on those borders, man.
Oh, yeah. They don't mess around when it comes to that. No. Oh, park there, get out of the car and just start walking around the area. Yeah, I don't think that's a good idea.
I'm here.
No.
I don't think the guy was like, "Hey, I was just trying to save you from going back when you get quarantined when you go back." Yeah. Maybe he was, but I don't know. My guess is no.
Guys, some of them seem like they really like that power. I'm just saying. Some of them really.
No,
Tom used to be one of those guys.
I was a student customs officer.
Were you really?
Yeah, and he liked that power too. Who'd you send it? Oh, you probably should.
I love that show, Border Patrol.
Yeah. I was one of
Let's
those
just say
guys.
there's one. Well, there's one particular hockey player that got sent in.
Yeah, let's leave that off.
We don't have to say
off
names.
But yeah,
Did you let him in or didn't you let him in?
Yeah, no, he got in. He
Nice.
played his game. Whether he should have or shouldn't have is a different story. But yeah. I also, I got to like CSIS would come up and show you pictures of people and say, hey, if this guy's on the flight or this woman's on the flight, try to identify them to us. The drug dogs would be around and they would have like a ball of like, back then it was like hash. They would put in like a tennis ball and they're like, hey, put this in your pocket. And those drug dogs were good. They would sniff that stuff out and they would all come out on the flights, usually from like the usual suspect kind of places. Yeah. And then you would have flights from like Orlando when it was always families coming in, and the families were so honest. They were all declaring stuff like, I have half a bottle too much alcohol and 3 Mickey Mouse dolls they put me over. And everyone's just like, just go, get out of here. It's 2 a.m. Your flight's late. Go home, please. Just get out of the customs hall. Yeah.
They were probably the smugglers too. Eh?
Yeah,
they probably they were probably the ones who you're like, get out of here,
kids,
family.
3 Mickey Mouse dolls and put us over with coke in.
Bottom of the strollers is laced with cocaine.
Yeah.
Outsmarted us.
Yeah.
Those Disney families.
Yeah.
Oh, jeez. Anyway, all right. So, guys, if someone wants to reach out to you guys for a mortgage for their first home, or who do you work with? Who is your clientele?
We mainly work with real estate investors that are looking really to get a different experience than at their bank. We're looking. We like to consider ourselves not necessarily mortgage agents. We're mortgage planners. With the clientele that we're working with, we really need to know the ins and outs of every lender out there. We need to position you in where you can get the most purchasing power possible. We also are firm believers that real estate investors do need a lot of guidance, and I always akin it back to an analogy I use, which is we like to consider ourselves more of like the professional sports agent. Our real estate investors are just the professional athletes, and the banks are just the teams. And if you kind of look at it like that, an athlete is good at what they do, but they're not good at signing the contract or getting their endorsement contracts. And they have someone who specializes at doing it for them. That's what we do. Now doesn't mean we don't work with first-time buyers. We love first-time buyers. We love anyone that needs a mortgage. But for the most part, our niche in this market would be working with real estate investors and providing them with what we think is a different experience than that they would get elsewhere. To contact us,
info at BM Select. Our company's BM Select. Like Dave said, mostly investors, but we work with clients of all kinds.
Info at bmselect.ca.
I was going to say there's a dot.
There's a dot in there somewhere.
Sorry,
hey, Dan's not a tech guy.
Yeah.
He's a sales guy, man. Come on, leave him alone.
20 years in mortgages. He's just started using email.
So info at bmselect.ca.
You got it.
And you guys are currently the #1 mortgage team in Canada. Is that fair? Do I say that or no?
That is fair.
There is a independent publication that every mortgage broker at the end of the year can send their data to this publication, and they will then take that data and they will compile a list of the top 75 mortgage brokers in Canada. And we've been lucky enough to be #1 for the last 4 years in a row. So.
And you guys have been for years helping out rockstar investors, buy properties, refinance homes. So I just want to say thank you for everything you guys are doing. I know this business is absolutely crazy and difficult. So thank you.
It's been a fun ride with you guys, man.
It's amazing.
This has been awesome.
Thank you. That's it, guys. Thanks.
Appreciate it.
Hey, thanks for tuning in. You can find every new episode of the Your Life, Your Term show on all the major streaming platforms. So Spotify, iTunes, Google Play. And if you'd like to get free copies of some of the books that we've put together, like these right here, or some of the reports that we've put together, like these right here, you can find all of those at www.rockstarinnercircle.com. That's www.rockstarinnercircle.com. That's it for now. Until next time, your life, your terms.